Okay, I record this video on Thursday, the 23rd of March, 2023, just gone 4:31 p.m. Chicago time. Do hope you are doing well. So it is the day after the Fed announcement of a 25 basis points rise in the Fed funds rate. And I usually say you need to wait 24 hours or so after the Fed announcement for things to settle down, for the dust to settle, and for trends and patterns to start to emerge on our charts. So been looking at my charts for the last hour after the market shut, trying to figure out what this means next for the markets. Got a few thoughts about that, and so I'll kind of run through my charts and show you what I am seeing. But just a comment on the announcement by Jay Powell and the both the announcement and the press conference that he did after the announcement. Normally, I don't watch these things, but I was kind of curious this time around because this seemed to be quite an important kind of meeting and announcement. So I kind of tuned in to see the press conference. And I don't know about you, but it didn't fill me with the confidence. The quote that I took away that he said when it came to questions, was talking about the weekend of the Silicon Valley Bank collapse. And he said, we were asking ourselves, how did this happen? And there was a look of uncertainty, kind of shock, real confusion. And that had me really worried because, the Fed has two jobs. One is to adjust rates so that they kind of minimize inflation, maximize employment and economic growth. And the second one, which is arguably more important, is to maintain the stability of the financial system. So that they were kind of clueless and didn't even understand how a bank could go down under these circumstances just boggles my mind. I would have thought that there would be, bank examiners reporting to the Fed committee, and all along the way, these months kind of leading up to the collapse of Silicon Valley Bank saying, we have a problem, this thing's getting worse. And from the other announcements, it did seem as if the bank examiners were in talking with Silicon Valley Bank over the last 2 or 3 months saying, how can we address this situation and so on. So the fact that they were bamboozled by the whole thing, that they didn't understand that they had caused this by the rate rises and the need for the bank to put reserves into things like mortgage-backed securities that was supposedly kind of safe, is troubling to me, to all of us, I should think. Anyway, so I've always thought, all of these systems are extremely complex, that we think that we can tweak things like interest rates and manage the economy is kind of naive. Because Mother Nature is in charge. Human fear and greed is driving everything. And I suppose I was just a little bit shocked when I saw the kind of look in his face. It's like he really was clueless. Anyway, so throughout the announcement, you kept on getting this message drilled home again and again and again. We are going to continue to tighten financial conditions until we slow the economy and get this damn inflation under control. So that's what they're going to continue to do. Now, the implications for that is, so rate rises will continue, therefore bonds will fall. And, when you start to tighten the financial conditions, that means the supply of US dollars kind of tightens up, and therefore the US dollars tends to strengthen. So can we see that in some of the charts? I think so. So I'm going to run through the E-mini first of all and then look at some of the other kind of markets and see if we can see a pattern. So first of all, let's talk about tick bar chart of the E-mini. This is the 13,500 tick bar chart. Use the @ES equals 106XC contract, which adjusts the rollover day, but it also gives us the day and night kind of session. And this vertical yellow line is the start of the week. And you can see that we had a little bit of a ramp first thing on the Sunday night open, and then the market kind of sold off with Rambo patterns. Rambo patterns mean this is amateur activity, very low average trade size kind of playing here. They often get wrong-footed as soon as the market kind of turns around, bang, they get kind of taken out of their positions. And then, of course, the day of the announcement, right at the highs, there we have Rambo patterns on the other side of the trade. So it's kind of a classic. That's a Rambo to Rambo channel. So poor old amateurs kind of selling it here and buying it here and getting wrong-footed. So where are we today? Well, we're in a downtrend because the background is printed in paint plotted in gray. That means we're in a downtrend in terms of volume and price. You can see the price bars. We've got better sine wave trending system with the white bars showing us we're in a downtrend. And then we're below the trailing stop on better pro-am. So in terms of volume and average trade size, we are under the trend. But we've had a little bit of a rise at the end of the day. We've got blue professional bars with a stair step down on better trend line here. So better pro trend, I should call this. Now, in terms of momentum, we got this sell-off during or after the Fed announcement. I think that's actually Janet Yellen speaking that kind of caused this sell-off. But anyway, we got blue professional bars kind of stepped in at a low there, and you can see we've got an exhaustion sell. We had a little bit of rally kind of back under the lip, perfect here under the trailing stop here, and we kind of sold off, and that was what I call an SR2, which is a support resistance on the intermediate time frame. So the lowest time frame is 1, intermediate time frame is 2, the highest time frame is 3. So SR2 is the intermediate time frame. So we hit that resistance, bang, we kind of drop down. Now, so what I'm looking at is we've got an exhaustion sell pattern here, and we've got a bullish divergence pattern here, and that bullish divergence is right on the zero line. And when we see a bullish divergence on the zero line, that means we're likely to revisit this kind of exhaustion sell with a flush pattern, which means it's an exhaustion pattern that kind of is not as extreme as the exhaustion sell pattern, but it's not as shallow as the bullish divergence. So I'm looking for some fireworks on the downside in order to get that flush pattern in. There's a similar kind of flush pattern here. Exhaustion sell, bullish divergence right on the zero line. We're looking for a flush pattern. And because we're under the lip, kind of here, we're in a downtrend and so on. I know we've temporarily got support on the highest time frame. Come in here with the solid red line, and we've had a little pullback to end of trend come in that's synced up with that. So a trending move on the lowest time, syncing up with a cyclical move on the highest time frame. It's kind of weak up here under 4,000. So let's wait and see. You know, if we kind of get a sell-off here below 39.50, are we going to have a little bit of a rise back up above 4,000, where the intermediate trend lines here on better sine wave will kind of come together and give us an overshoot that gives us a resistance pattern that we have to kind of play down. So it's unclear at the moment, but because we haven't seen that flush pattern or you know, a decent kind of reading on better momentum bullish divergence, that's not kind of good enough to bottom this market. So I'll be looking for that kind of on the way down. If we go up a time frame to the 15-minute chart, this is the activity this week. So over the last 2 weeks, what we had was a nice Rambo pattern with a test with blue professional bars kind of step in here, and we get Rambo patterns as we were talking about kind of on the high side of this move. Super volatile at this point here, but this looks like a pump and dump to me. So the professionals kind of come in and they pump it up, and then we suddenly kind of drop through the low, that support there here. We've got blue professional bars stair stepping down here, so it's not looking pretty good on the 15-minute chart. They've kind of used this activity here to kind of get rid of a whole bunch of volume, and we ended up with a little pullback to end trend on the lowest time frame, and that energy is coming down because on the highest time frame we got this resistance in, we're breaking below that resistance, we got to play that energy out. And then here we're sitting on a double support here with low and intermediate time frame, no pullback to end of trends on the way down. So 39.50 kind of getting through that would generate, you know, another continuation of that downtrend. And then we'll go see kind of more exhaustion patterns on the downside that we've not seen really kind of down here. So I think we're vulnerable to a break to the downside, but whether it comes with a little short-term kind of blip to the upside and then kind of rolls over, or do we just kind of get going in the after hours and just continue through 39.50s? So have to wait and see. So not too keen on equities for the time being. I think we got to play this thing out until we get those exhaustion patterns at the bottom of this move, although this is an important kind of low down here. So somewhere, I don't know, 39.50, we're talking about this kind of important break level, and down here at just below 3900, kind of important levels. So let's just wait and see and play the break if we get it, starting off potentially in the overnight kind of session or early tomorrow morning. So let's see what happens. So let's just look at a couple of other tip bar charts and then some daily charts. because I'm talking about tightening of financial conditions, therefore the US dollar goes up and the currencies kind of go down, euro and so on. So the euro here, yep, we had some false moves, false signals here, but with those signals, neither of these broke into a downtrend because we didn't have white bars with the better sine wave trending system. The system kept on trading up. But with the Fed announcement over that kind of period, here we've had a little bit of a U-turn. So professionals kind of getting it back up to 9.5, getting out, selling it down, exhaustion sell, kind of getting this move going. So I'm short euro at the moment, need this thing to break support at this point in order to continue down. So that would be, you know, a consequence of the Fed tightening if the euro starts to sell off. Aussie dollar, where you can often see these moves kind of develop early because it's the one of the high beta type, high volatility currencies. And you can see here over the last couple of days we've had triple signals kind of line up here. It's been pretty junky on the Aussie dollar, but that's kind of starting to signal short, and you know, we just need to get through this sequence here back down through 66.9 to go and give confirmation that Aussie's kind of selling off. British pound, not so sure that's as clean as the euro. Japanese yen, well, we've got a whole bunch of blue professional bars. First time in, blue professional bars are those highs. Second time in, we kind of have even more blue professional bars. Here we've got to break through these levels, kind of get this thing moving. We've got a signal here, so really through those lows will be kind of good confirmation that we got a downtrend going in the Japanese yen. So that's kind of the currencies. Now, precious metals are doing gangbusters at the moment. So this is gold. And we didn't have blue professional bars at the highs. We've kind of come down here. More blue professional bars kind of step in yesterday, today, and kind of rallying up. So gold is still looking strong. No blue professional bars at the highs. Same thing with silver. Exhaustion buy, bearish divergence up here. And Bitcoin, super volatile. We have a signal at that point here, but we rallied back up. So you know, we'd have to get through 27,000. in order to get a confirmation that that's kind of changed trend. So they're kind of looking strong at the moment. Crude is the one that I'm interested in looking. So this last weekend's video talked about the setup in crude down here, oversold at kind of 65, or I don't know what the low down there was. It was pretty extreme. Yeah, kind of below 65. And then we had a stair-step trade come in here. Exhaustion sell, got rid of some volume there, and blue professional bars kind of stepped in. So let's see if crude continues to rally. That would be interesting. And yeah, that's the only things I want to talk about there. On the daily charts, if I'm right about this kind of change in trend with the currency pairs and that the euro is going to sell off, this will be a massive pattern here of a pump and dump, that blue professional bars kind of stepped in and they gamed it up to here and used all of this activity to kind of get out. I mean, confirmation would be through 105, which is a long way away from here, but we are overbought in terms of better sine wave. We've had a good run down here from the 97s, and you know, if that turns out to be right, that could be a super big kind of trade on the euro. Crude on the daily chart, that's all of the activity that's kind of coming in at the moment, so that's a big turn. So we've got a signal with today's activity on crude. So if crude kind of continues off, if I've got the euro right and it really solves off, that'll be interesting. Bonds, what am I talking about? Didn't even go through the bond chart here. So bonds here, we had nice signals midweek kind of leading up to the Fed announcement. And what's got me troubled at the moment is all these professional bars that have come in at these highs. So it's over bought. We don't have exhaustion buy up here, but that's looking as if that's professionals kind of taking profits up there. They didn't get out here. They kind of gamed it back up, buying it here, and they've got in kind of again. So let's wait and see if 10 years change trend. And then if we look at this on the daily chart, all of these blue professional bars kind of, we had beautiful pattern here topping out. Blue professional bars step in with exhaustion buy, and we sell off, and then they've gamed it all the way back up. We can't get through better pro trend here. That never breaks, and we continue down, and that's just been a massive game kind of going the other way. And so bonds fall, rates rise, continue to rise, which I suppose means, does that mean Silicon Valley Bank was just a storm in a teacup, and that the Fed's just going to keep on doing what it's going to do, and that we're not particularly concerned about a collapse of the banking system with increasing rate rises? So that's all I can kind of proffer for today. Let's wait and see with Friday's activity. But for me, these kind of levels are important, through 39.50. If we break through that, that's going to take us into a trending move on the intermediate time frame. That could get interesting and ugly. So let's see what happens. All I can do is just kind of roll through my charts and just show you what I'm seeing, some of the signals and how they might develop. So let's see what happens. Interesting times though.